Greetings. Let's take a look at the general stock market's effect and influence on stock breakouts. But first, I greet you in the love light of the one infinite creator. Alright, let's take a look here. We are seeing the S&P 500 over the last couple of weeks is down. Let's call it in the range of 12% down. That's a huge drop, especially take a look at how individual stocks have been smacked. Now, we had a similar drop here in late 2023. Now, this drop here was almost 11%. Now, it's hard to see this drop here, so let me remove the volume. All right, so now we can see the drop. So these are sizable drops here, 2023 into October, and we are seeing a similar drop here. So now, if you've been trying to play breakouts, and I have to admit, I've been doing that, sending breakout alerts for clients, breakouts that have been sent during this attempted moves higher here in trying to catch the next bounce. All these breakouts here recently have failed. So in other words, as we've been trying to anticipate a reversal here in the last couple of weeks, stocks have not performed well. Why? Obviously because of the influence of the general market, which has decided to be downwards. Now, understand that this is something we always have to keep in the back of our mind, if not at the primal. Influence here is that 75% of a stock's trend is going to be based on the general market, 15% is based on the industry the stock is trading at, and about, let's call it about 5% or so to 10% we can see is the individual stock's own energy. So most of what we see in a stock's performance is going to be in line with the general trend of the market. Now, in as much as trying to time breakouts when the market is in a free fall in the short term is very risky, because obviously the breakouts are going to work for a little bit and then they are also going to come crashing down. But there's also the reason for staying in the market. The reason being that if you happen to catch a breakout, let's say in this time period here in October, week of October 23rd, 2023, if you caught the breakouts in this week here, those stocks would go on to more than double in a couple of months. So the beauty of catching stocks when the market is down, so the beauty is if you can catch stocks that are breaking out and are going against the trend of the market while the market is making lows, is as the market starts recovering, the stocks that were already breaking out are going to have a substantially higher pace of acceleration to the upside. Now, let me give you an example. So I went back and checked the breakout alert I gave here on the 23rd, the week of October 23rd of 2023. So 2023, October, when the market was at the lows here. Of course, you don't know whether the market is going to rebound. It's a risk because the market could also easily have gone down here. Here, the market could easily go down. We don't know. Or the market could be setting a floor in the short term and the next meaningful trend is higher. We don't know that. But if you can find reasons to get back and play breakouts to the upside, as we did here in October of 2023. So as the market was going down, I sent a breakout alert for my paid clients, and the ETF that I had noticed was making a new high as the market was going down here was BITO, which tracks Bitcoin essentially. So go back a couple years here. So in October of 2023, when the market was making that low, this instrument on the other hand was breaking out. So a breakout right there. Compare that with the general market at that particular time. You can see the general market was trading right here. Now, needless to say, within about under 6 months, this ETF, which tracks Bitcoin and Bitcoin itself, would go on to more than double in price within 6 months. So more than 100% gain. And so that's the reward you get for playing breakouts when markets are in a pullback. All this to say that yes, markets could be making fresh lows in the current market. We could be seeing another major leg down and continuation down that might last months, might last years. We don't know that. But if you can catch breakouts that are going against the market going down, as the market is going down, the stocks that are holding up and are going to be the first ones to break out are going to be the ones that are going to have the biggest return in the shortest amount of time possible as the market itself recovers. Now, let me give you a little bit of a trick. So you can see this is October now. This is 3 October. That drop I was talking about is here. So one thing you can do to put yourself in the best possible light is you want to wait for at least the monthly charts to turn positive. At least the monthly charts should lead the way. So until the monthly charts turn positive, the risk in the current market is that we continue going down. So if you want to play breakouts after a pullback in the market, maybe at the very least insist that the monthly charts are pointing higher and are positive for the month. That way, you can at least give yourself the best possibility of riding breakouts to the upside. And again, if the monthly charts turn negative again, you can take that as a sign that the market is struggling. Right now, we are seeing the market struggling to hold positivity. So we just started trading here. This is the third day for April 2025. So until the market turns positive for the month, there is no need to be chasing breakouts. That's one way to make sure you're not trying to catch breakouts when the market is on a free fall. So yeah, the general market does influence breakouts, and with about 75% of a breakouts trend tied to the general market. So we have to pay attention to the general market. Otherwise, that's it. I leave you as I found you in the love light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator. Adonai.